So some of the things that we're going to make sure we cover today leading to these learning outcomes are we're going to increase awareness about best practices and strengthening internal controls and meeting the match or cost share requirements for our TVR programs. And I use AVERS and TVR kind of back and forth. It's the same thing. Excuse me. And so hopefully I don't confuse anybody on there. I know a lot of people might be very seasoned, but we also may have some new people on. And so TVR and AVERS is just kind of something that I interchange. We're going to increase knowledge of the Northwest Indian College TVR Institute Financial Management Toolkit. And we're going to increase understanding of grant management, including understanding the grant cycle, cost principles, and OMB Uniform Guidance. Go ahead, next slide. So what is fiscal management? It's the process of planning, directing, and controlling financial resources and the management of responsibilities for expenditures, which that's a mouthful, and there's a lot that goes into it if you don't already know. It's important to understand the many strings attached to these grant funds to ensure compliance with tribal fiscal rules and to comply with the federal regulations. Fiscal management is essential to the long-term success of the AVERS programs. And we can go to the next slide. And so when you address your budget in the grant, there are multiple areas. The first one being in the abstract. And some of you may have familiarity with the grant application process, depending, of course, what your role is within your program. You might be here as somebody who wants to apply for your tribe for a grant. And I don't know if anybody might be on that hasn't already established a grant. But even if you have a grant and you've had one for some time, you know, maybe you haven't been involved in the past with that process, or your roles might be carrying out different things that aren't related to the budget part at all, or the grant writing process. So the areas that it's addressed in the grant is in the abstract, and in the abstract you name the principal director, the project director, some people say program director, but the language in the grant application is project director, and the percentage of time the director will manage the project. Not all programs have a director that devotes 100% of their time to the AVERS program. Some do, and some maybe they're split up. Their activities include other programs as well. So that will be outlined in the abstract. The proposed number of individuals who will receive services under an IPE for each budget period. And our budget periods are from October 1 to September 31 of each year. And then the proposed number of individuals who will obtain an employment outcome for each of the budget periods of the project. And our projects run for 5 years, but the budget periods are the individual fiscal years that follow the federal fiscal year cycle. The other areas include the quality of the management plan, which is a section in the grant application, and that part is worth 15 points. And the specific, I guess you could call it bullet or section, is in the little I section of that area, and it's the adequacy of the management plan to achieve the objectives of the proposed project on time and within budget, including clearly defined responsibilities, timelines, and milestones for accomplishing project tasks. One of the other areas is in the ED 524, which is a form, and there's the federal and non-federal section of that form, talking about federal dollars and non-federal dollars. In the budget narrative, and also in the application for federal assistance, which is a form that's called SF 424. Go ahead with the next slide. And key areas to consider from the annual performance report is the sections that cover the budget, discussion of servicing American Indians with disabilities, VR services, educational services, employment outcomes, interaction with the state VR agency or agencies, the evaluation section, and then where you discuss consumer satisfaction. So reviewing the grant budget, one of the things to consider is how much match the tribe will be contributing to match those federal dollars. So the director and the finance officer or finance office, some people call it the budget office, but in here we refer to it as the finance office throughout, can work together to determine how to document and or verify the match. And for some tribes, that can be a complete cash match where they give that amount, that dollar amount to the program to incorporate into their budget, or it might be in kind, and it could be a combination. So it depends on what each tribe is able to contribute, how they're going to contribute it. We all have 10% that the tribe is supposed to contribute, but how that plays out can vary tribe to tribe. So it depends on how much funding that the tribe asked for their grant to carry out their services and their objectives and their goals, and then the tribe agrees to match 10%. And so this is from the 2 CFR 200.309 cost sharing and matching is where you can find the language on that 10% match. And it's calculated from the total project cost, including the match amount, not just the federal dollars alone. And we have a link there in the slideshow. Could we put that in the chat box so that they can grab that if they'd like to?
Or will. Thanks, Rachel.
Yeah. And then the next area is the indirect costs. And that is related to the costs associated with the running of the grant that aren't the direct dollars. And the direct dollars would be like the actual funds that are used for things like VR services and personnel salaries and fringe for the tribal VR staff. And there are a number of other things. It may differ what falls under indirect versus direct for some programs, because depending on what the tribe covers with their indirect costs, it could be the administrative duties of those higher up than the actual people in the grant itself, such as the HR services. Most tribal VR programs don't handle their own payroll and all of the duties that the finance department usually handles. So there's a portion that is distributed to those other departments to help with the overall administration of the grant and running the grant. And those often fall under the indirect costs. So those are some examples. A lot of tribal VR programs don't have their own IT department. They rely on the tribe's IT department. And the different programs within the tribe likely all contribute some to that IT department to keep them going. And though they all pay, or many of the programs will pay indirect costs, and together that will make up some of the funding for the IT department or the human resources salaries and fringe and such. So those are some of the things that might fall under indirect costs. And then fund accounting, that is something that falls under usually the finance department or the finance office, and they usually have an accounting system, and that can break up for them department by department the different funds that are available. And when you make your expenditures, such as paying for a TVR service, it gets coded in the right way and it gets charged to the right account, the right fund, taking it from TVR dollars rather than accidentally taking it from another program's dollars. Excuse me. I'll let everybody read a little bit more. I didn't read it word for word, so in case anybody's reading, we'll give it just a few more moments.
I was gonna say, Rachel, that someone put a question, and I feel like you already talked about this, but Anita asked, could we give more examples of in-kind and non-cash match? And so
yes,
can we talk about that a little bit and maybe give some examples?
absolutely. So my first thought of an example is if you are not paying for space cost. If you're located at your tribal complex, for instance, or a tribally owned facility or office, whether maybe they have it off at another location, but they own it and they are not charging you rent to be there, then that could be counted as part of your match. If you don't have to pay utilities, say the tribe pays for everybody's utilities, then that could be counted as part of your match. Now, if they charge you for it as part of your indirect, you don't, that's kind of double dipping. You can't count that twice. And Jamie or Lee or any of the other directors online, definitely feel free to jump in there if you have other examples, or if I'm saying anything incorrectly. But you want to make sure you're not getting double charged for something. And another thing is sometimes indirect costs are including maintenance. If you have, say, you're in a shared building that the tribe manages or owns, and they have somebody come around and empty trashes and mop or sweep and vacuum the floors, and then doing things like fixing things, such as if an air conditioner goes out, and if it depends on if they already charge you some of those things for indirect costs. So you want to, so those two, even though they're separate things, there can be overlap, and it can differentiate between tribe to tribe. So you want to make sure if they're charging you, or if they're counting it as match, they're not also charging you in your indirect cost agreement. So it can be a little tricky. You have to know what's included in your indirect cost, because you don't want them to turn around and say the same thing is something that they're giving you as part of your match. So it's something to be careful about for sure. I'm trying to think of some other examples. Maybe the use of a tribal vehicle, and you don't have to pay for the upkeep of that vehicle. You don't have to lease that vehicle. You don't have to pay for repairs and just things like the tires and the gas, depending. You want to, again, if they're counting that as match, if you're going to say that that's part of your 10%, that the tribe is contributing to the success of the program and carrying out grant duties, you want to make sure that's not counted as part of your indirect costs, because that would be double paying basically. And Otter, honestly, I'm not super familiar with the tribes that are in 477 and all the details in that. I've heard a lot, but I've never been with one that is 477 up to this point. And so that, are you counting that as something that was put under indirect costs? Yeah, and I think that might be somewhat common. But I can't really speak too much to it. I think there might be somebody else on here that is, oh, I think it was maybe Teresa's who I saw, and I think that she is with a 477 program, but she had to step out. I could be wrong. She might not be with a 477, but I think she is. Jamie or Lee, do you have any input on that?
Yeah, I was basically going to say the same thing, Rachel. We don't have information, that kind of information about 477. It's a good question. Thank you, Otter, because I definitely wrote it down, because I'm going to be asking our project officer about that and trying to get some guidance in there. But yeah, I haven't heard of that, of the 477 director's salary being considered an indirect cost, or maybe even a match of some sort, but we'll try to find out. Thanks for that.
See, perhaps, but I might be wrong, but to me, it would make a little bit of sense, or I shouldn't say a little bit, it could make sense, just like we pay, several tribal VR programs pay a portion of the tribal administrator salary and part of the finance department salary and things like that, because they're overseeing. Now, it would depend if that's the whole salary, I wouldn't think so, but if multiple departments pay a portion, then I would see where that would likely be allowable. But again, I don't know a lot about 477. So I'm not saying that's, for sure the answer, but I could see how that could possibly be similar to just like the tribal administrator, the finance or IT department's salaries. Thank you for that input. Okay, so a little bit more detail about each definition. So match and cost sharing is required by all the tribal VR programs, and it's covered in, excuse me, I got a little gnat or something, in the Rehabilitation Act and in 34 CFR 371.40, and it's 10% of the cost. Now, if a tribe had a particularly difficult year where they were not able to, there is the option to speak with RSA and your project officer about asking it to be waived. That would be a conversation to have with them as soon as you know that that 10% wouldn't be able to be matched for that year. And it is a case-by-case basis. It's not something that just is requested by the director. It would have to be generally a formal letter from the appropriate tribal leader within the tribe. And it's not a guarantee, even if it's requested. Also, it doesn't carry over one year to the next. So if somebody had, you know, 2 very difficult years, maybe the business in that area and the tribal entities that are owned that produce revenue for some reason didn't do really well. You know, there are a lot of different natural disasters that, you know, a lot of the tribal VRs have experienced over the years. So that might be an example where something happened and the tribe had a lot more expenses than usual or had a lot less revenue than usual. And they might be able to ask for a waiver. But if they get a waiver one year, they have to ask again the next year if they still think that they're going to need that waiver. It doesn't just carry over into the next year, that approval. And then in section 200.29, cost sharing or matching means it's the portion of the project cost not paid by federal funds unless otherwise authorized by federal statute. See also section 200.306, which discusses cost sharing and matching. So that part about it not being federal funds is really important because many years ago, some programs mistakenly thought some things that maybe would be considered more comparable benefits was counting as match or cost sharing. And that's something separate. And those particular ones that some thought were counting were also federal funds. They might have been, you know, maybe students that were attending training programs and they were getting federal financial aid of some sort or another. Even if it's coming from the tribe, it was originally federal dollars. And some programs were mistakenly counting that as the cost sharing or part of the match. So it's important to remember that it has to be non-federal funds. There are certain ones that do count, but it's not very often. So it's important to double check with your project officer too if you have any confusion about what does count as cost sharing or match funds. And for the in-kind definition, that's in section 200.96. Third-party in-kind contribution means the value of non-cash contributions such as property or services that benefit a federally assisted project or program and are contributed by non-federal third parties without charge to a non-federal entity under a federal award. So another example might be if you're doing outreach or hosting a meeting, maybe in a nearby community, and if that location would normally charge for that meeting space. Maybe you're having some big event, some training, maybe you're having a consumer forum where you're inviting a bunch of your consumers and other partners to come in and meet about what your services are that you offer, get satisfaction surveys, or a number of things that you might be holding that event for. If that is a location that normally charges, but they waive that fee for you for that facility, for renting it out for that, you know, evening event, 3 or 4 hours, they usually charge, say, $500 an hour. That's probably a huge inflation, but say they charge $500 an hour, but they say, well, we'll waive that for you. And the best thing to do is to get that documented for them to get you an invoice like they normally would any other entity, any other program, put how much they would normally charge, but then they show on there that they waived it. That could be considered in kind. It's basically a donation to the program by them waiving that fee. So that's an example of another in kind event. I'm trying to think of some other examples, and feel free to throw some out there. Either you can unmute or put it in the chat box if you can think of some others. But that's the only one I could think of for right now, is waiving those kinds of fees for the program. Okay, you can go ahead and go on to the next slide.
Okay, thanks, Rachel. I was wondering, like, I think someone asked me one time, is furniture considered match or in kind? So if your program,
well, I think it would depend on, is it something, oh, go ahead, I'm sorry.
No, I was just going to say, like, all of the desks for all of your staff, or, you know, stuff like that.
It depends, I would think, if it was something that the program already needed and was going to seek out.
Mhm.
If it's just, oh, we're getting rid of these and we're going to donate them and we need somewhere to put them, and hey, by the way, let's give them to VR, I wouldn't count that as match or in kind. But if, say, the tribe, it has some extra funds for some reason and they say, we want to go ahead and we know you all need some new desks and you are going to purchase new desks, we want to purchase that for you, then, and it's not being counted as like the indirect cost or anything, then I would think that could be counted. And I think it could be a little tricky what you count as match and what you count as in kind. Well, see, swag is a little different, Otter. I'm referring to those who, for those that might not be following the chat, Otter said we've done with swag. Since we're not allowed to purchase swag anyway, it's a non-allowable cost. I don't think we can count it as in kind or match, in my opinion. And I could be wrong, but I wouldn't. I would be very hesitant to do that in a program that I would be with, because we're not allowed to buy that. So while that can be a donation, it, in my opinion, wouldn't be counted as in kind. Does anybody think differently on that? That maybe is a seasoned director on here or has that guidance experience? Since we wouldn't be going out and purchasing it with our TVR dollars, I don't think it could be counted as in kind. But donations are great. Keep them coming. Okay, go ahead, Jamie. So setting up financial tracking. And this may or may not be something that you do, but there sometimes are times when the director or an assistant director has to be away unexpectedly, and you might be asked to sit in on some of this. You might be asked to take over some of these duties. And so it's always good to have a general understanding, in my opinion, even if you don't think that you'll be taking on those duties at some point. Or maybe you're looking, you have those duties already, but you're looking to change them up. So once a budget is established, it's important to get a system to track those expenditures. And the way I think of it, and I think it may be kind of worded this way on one of the later slides, the way I think of it is, for those who still use a checkbook or are familiar with the checkbook, you know, when you go and you use it, you write down what your expenditures are, what you spent your money on, and then you reconcile it. You check either, you know, a lot of people have online checking now, online banking. So you'll either go on your online account and double check, what does the bank say that I spent? Do those two things match up? If you're somebody who's still a paper person and you get a financial statement in the mail, then you might open that bank statement month to month that you get in the mail and check it against your checking register, your checkbook. And so similarly, we do that with the tribal VR dollars. We have expenditures, we have things we have to spend money on, and then we have to get with our finance department, maybe in multiple ways. There might be different ways that they share that information with you, and you want to check that they match up, what you say you spent versus what they say you spent. And then in addition, we need to make sure that we are all on the same page as with what RSA says we spent. So having that system and working it out with your finance department so that we're all on the same page and we're staying on track is really, really important. And the more you do that, the more frequently you're checking, then the easier it is to get it fixed. You know, you don't want to find a mistake 10 months later and everybody's in the scramble at the end of the fiscal year. So staying on top of that will help things go much more smoothly. So reports from the accounting department are one of those steps, and they should be providing the program directors with a report from time to time. That may be weekly, that may be quarterly, it varies program to program. And as directors, we can advocate for that happening more frequently. You know, we've heard, I say we, you know, in directors meetings, in AVERTAC trainings, in Northwest Indian College classes and such, at KNR conferences, you know, just in discussions, different directors and different staff, we've heard, well, my program only does drawdown twice a year, and that's when I get the report. Well, I don't ever see those reports. They just handle that. We've had those kind of comments. And so as a director, in order to best manage the program, that's something that you can advocate for and say, I really need it more frequently than that. Or sometimes it'll be an incomplete report. You can say, I really need to know more information. I don't just need the total. I need the line by line so that I know that we're accurate, know that I'm accurate on my end and that you're accurate on your end. So you might have access to some of those reports and you want to make sure that it's meeting the needs for you to carry out your duties. So at a minimum, it's requested that an itemization of the current fiscal year's expenditures relative to that year's budget is included. Also, and I'm on number 2 on the slide, the total amount the tribe has drawn down from RSA on the G5 system for that fiscal year, or a drawdown report, as well as a report of all funds that are encumbered or allocated but not spent, which includes a log of issued purchase orders. And so that might be that you have open POs, active POs that haven't been completely spent, or maybe they've been spent, but they haven't actually been paid yet. But those dollars, you still need to account for those. You still need to not overspend, and making sure that you have those included in those reports will help you to stay on track. So utilization of a CUF account is another method that you can use to stay on track. That's not a requirement, but it's helpful for a lot of people. And that can be, again, similar to a check register that you might use with a checking account. Another way of just checks and balances, being able to make sure in a organized way that you're staying on track. Maybe some people like to use a logbook and write it in, or they use just a typed up version, but a CUF account can have features on it that will help you to stay on track. And for some, that would be a preferable way. So I will show just like a very basic, let me see if I can share my screen first of all, just a very basic template of an example of a CUF account. And CUF accounts can look very, very different. Let's see if I can share real fast. Okay, I do have the capability, but it doesn't look like it's showing that form. So hold on one second. My Excel sheet. And I'm sure you can, it's not wanting to pull up my Excel sheet. So give me just a second here. Maybe if I close a window or two. I'm sure you can find some examples online as well. And I honestly don't know if they're always in Excel. That's just where I've always seen them, is in Excel. And you can tailor it, of course, to your program. Oh, there it is. All right, let's see if that will come up for you. Excuse me. Okay, so if you look down here at the bottom, you can add, this is just Excel, and I am no expert in Excel whatsoever, but you can add extra tabs right here. And these can be your different line items. I just gave them very generic names. And I only put any info in this one to show you. But if you go all the way to the left, excuse me, as your main page, you might call it something like overall budget page. And then each of these other tabs will have formulas in them that tie back to that very first page, and it'll help you keep a running log. And so just as an example, you might break it down. So this is just your utilities. If you have utilities at your program, this is just utilities, and you might break it down by month. Maybe you pay the gas and the water and the electricity. So each one would be entered, and you would have to choose what works best for you, as far as maybe entering the invoice date here, or the date you received it in your office, or the date you entered it into the CUF account, but you'd want to just be consistent with whoever's managing it. And then the document number, an explanation, and then the amount. And you might add more columns and such here, but these are just very brief examples. And then you would want it to be where this down here for the month would total up all of the expenses for that month. Then if you scroll down a little bit, then that would be the next month. You do the same thing and the total for this month's expenses. And so if I added another 100 here, I don't have a formula in here, but say I added another 100 here, then it would be automatically changed to 295. So that's just how some might choose to set it up. There are a lot of other different ways, but then each of these that I highlighted here, like I said, would have a formula, and they would correspond back on the very first page. So you'd have it broken down by line item or category or code. People call them different things, but then that would all translate over to that main page where all the details are of all your incoming dollars and your outgoing dollars. And then when you get your reports from your finance department, you would want to make sure that those all coincide together. And maybe they have a typo and they took it out of the wrong code. Maybe it was utilities, but they accidentally put it under space cost. Or maybe it was a consumer service and they accidentally put it under equipment, because it might be something that if it was for the program, it would have fallen under equipment. But since it's consumer service, then it falls under that code or that line item. So those are the things that you want to just double check to make sure that everything's lining up on their end and your end. And it could have been that the program accidentally coded it wrong, and that's when you catch it and say, oh wait, we have to fix that. We made a mistake. We listed it under equipment ourselves, and so finance had it under equipment, but we meant to send it as consumer services. So just another way for everybody to work together on keeping things straight. All right, I think I stopped sharing my screen and we could go back to the PowerPoint.
Sure, I will.
Okay. And Lee, I see your comment here. As part of the AVERS program staff, some include a business manager that will be responsible for the program financial management along with the TVR director. If not, some tribal finance departments will assign one of the accountants to work with the AVERS program director. True, that's awesome too. I think that's a really good idea. Or sometimes people have an office manager that does that as well as other tasks within the office. So I think that could be really helpful. And so here is, I don't know if can you increase that a little bit, Jamie? I'm having a hard time seeing it. Thank you. So here's just a screenshot of another type of way to manage your finances with a CUF account. And you can see down at the bottom where this particular one gets color coded based on the status, whether it's already cleared, whether it's the check has been requested but pending. And oh, I don't see it now. Can you scroll back up for a second? There you go. And so there you can tailor it to how you think will best work for your program. And maybe you already have one, but there's some ideas here that are being thrown out that you might want to incorporate as well. And go ahead and scroll down now, Jamie, please.
I was just going to say that this is an example from the TVR Institute's financial management toolkit. And so if you take the course, and Rachel will probably be teaching it, you'll be able to get some of these resources from the class that's offered through Northwest Indian College. So we just wanted to share that information with you.
Thank you. Oh, and Kylie says, how can I get information about the class? There is a listserv from Northwest Indian College where they send out the enrollment information, and we can put in the chat box the contact for that so that you can be added. The summer classes just started, but they are already accepting registration for the fall classes. And I don't know off the top of my head when 311 is going to be offered again. I don't know if it's being offered in the summer, and you may still be able to enroll in the summer, but you'd have a late enrollment fee because they just started this week. So you may still be able to. It depends probably on how quickly you could be accepted as a student at Northwest Indian College if you already haven't taken any classes yet. But yes, there's the website to start that process, and then we could get you contact information for the individual that handles enrollment as well. Enrollment in the classes, not in overall student registration. That's a good question. And I think oh, go ahead, Jamie.
I was just going to say, if you go to AVERTAC's website, avertac.org, I'll put that in the chat. There's a link directly to the TVR Institute on our website, and you can click, do you want to go look at the courses? Do you need contact information? You can just go right there to avertac.org and get all of that information to contact Northwest Indian College and the TVR Institute on classes. Sorry.
And if you do go to the Northwest Indian College link directly, it's a little tricky to get to the TVR Institute. So I think the AVERTAC way is easier, or on the main page of Northwest Indian College, you can put in the not chat box, the search bar, TVR Institute, and I think it will get you there. But it is a little hard to just kind of find it and navigate on without doing that search or doing it through the AVERTAC page. Last I checked anyway. All right, let me make sure we covered everything in that cuff account section. I think so. I think we did. All right, and so most programs I think have already done this. All of the programs that I've ever spoken with, for instance, have something, but if not, it's really recommended that you don't have the individual names of applicants or consumers or participants on their case, like on their case file. And when you're requesting services that you send through the finance department, for instance, and say who it's for, it should be coded in a confidential manner. That code, there's not a universal way of doing it across the different TVR programs. There's not a requirement of having it set up a certain way. And so that's something that each individual program has developed or maybe taken on somebody else's suggestion. When they first started, maybe they found out from somebody nearby how they use that code or something of that nature. But it shouldn't be where the names are visible. It shouldn't be where, if you're turning in paperwork for the finance department, even the receipts sometimes can have that information on it. Say we're getting somebody's vehicle repaired, even though VR doesn't stand for vehicle repair. We do sometimes provide that as a service. And when we turn in the receipt to show why we spent those funds, we need to make sure their name and their phone number and their address and their type of car and their tag number, their license plate number. Sometimes different receipts might have that information, and their I don't know if I said phone number or not, but their phone number as well. And those things, when you're turning in a receipt to, or a quote before a service, when you're turning those into finance, then we need to white that information out and put their ID number, if that's what your program calls it, some confidential code that references that consumer's information, but that finance would never know, oh, that's so-and-so, that's my cousin, that's my neighbor, as long as, if we are audited by RSA, you have that paper trail that ties that code to that consumer and all of the details in their file. That's the important thing. But finance does not need to know that information. Tribal administration does not need to know that information. And you're actually not upholding the assurances that we gave RSA when we applied for that grant if you are revealing that information. The confidentiality is so important. And so it's our responsibility to make sure that finance is aware of that. And it's not that we're trying to be secretive, we're just following the rules. And the tribe may have certain rules, but we need to work with them and let them know, in order for us to be administering this grant appropriately and accurately, this is what we're required to do. We need to protect that privacy of our participants. And so RSA has said many times, and AVERTAC is willing to help as well, that if there is a tribe, if administration or the finance department needs any training on that, needs to know, why we're saying that, and that it's not just maybe somebody trying to butt heads, that's a requirement of our program, and RSA and AVERTAC will help us to get that information across if we're having a difficult time doing that already. Sometimes, higher ups that they're wanting to do a good job too, and they want to be responsible with those dollars. So they may think they have to keep track in that way and know who's getting what. They may think, well, that person already got this service a year ago. Why are you giving it to them again? And that's the tribal VR's department to manage that and make sure that that is an appropriate service for that individual again, if that's the case. Nobody but the tribal VR staff is aware of all that person's details in relation to their disability and the barriers it causes for them to become and remain successfully employed. Finance isn't trained in that. Tribal administration isn't trained on that. We rely on them, and they have a lot of good experience to bring to the table in their realm of specialty. But TVR that's the specialty for our program and our staff. So we know those details about those individuals, and we again have to protect that privacy and not share that information outside of the TVR program. And Lisa's financial tracking. These requirements may need to be included in the policies and procedures for a consistent way of financial tracking. Definitely. Very good point. And next is inventory management. So this still falls under finances. We want to make sure that we're keeping track of our equipment, and that we are being diligent with our TVR dollars, our grant dollars. We don't want to buy 20 of something because we weren't keeping track of it, and we only need 8 of them, but we bought 20 because we didn't know, where they wandered off to. We didn't keep track of the fact that we had them, but they were back in storage or something, so we just bought more. It's important to have a system in place where we track our purchases, and then if we loan them to participants for their use when they're, say, for instance, in a training program, or in job search, maybe they need a laptop, but we're not necessarily going to purchase one for them to keep. We might lend it to them, and you should have a system in place for keeping track of those items. Who has it, when was it returned, what kind of condition was it in when it was lent to them, as well as when it was returned. It may be equipment that they need for a training. It may be for things such as on-the-job training. It may be for an internship. And depending on the time that training program or placement might take, it might be that they borrow it for a period of time, turn it in, and then they get their own, say if they get hired on permanently, and then the borrowed items can go to somebody else who might need them temporarily. So if you have that kind of setup, you want to make sure that you're developing a system and maintaining a system to keep track of those items, in addition to your program's day-to-day items. And there is an equipment agreement example where people can say, yes, I did receive these items, I agree to the terms, and then also a form for when they return those items. And those are on the Avertech page, aren't they, Jamie? Okay.
Yes, I was just typing in the chat that if you go to the case file example under our products and tools on Avertech's website, there's in that case file example, there's all kinds of examples of different documents and forms and templates, but the inventory agreement form or the inventory loan agreement is in those documents. You can download that and print it if you want to.
Awesome. Thank you. And we can go to the next slide when you're ready. Okay, so budgetary considerations. Managing the program budget requires regular attention from the director. Also, getting expenditure and drawdown reports like we talked about from the finance department on a regular basis and keeping track of those. It's one thing to get them. Maybe the finance department gives them to you every month. But if you're only looking at them every 3 or 4 months, then that might not be the most effective and efficient way of managing the budget. We need to keep on top of that as much as we can Make sure that we address any inconsistencies as they arise, instead of, like I said before, waiting a really long time and trying to scramble at the end of the fiscal year to get those things caught up or remedied if there was a discrepancy. So at least every quarter is a recommendation that the expenditure reports from the finance office are reconciled with the agency CUF accounts, or if you use another method besides a CUF account, this will help to identify and allow for those to be addressed. Any outstanding encumbrances or questioned entries, allow for those to be addressed in a timely manner. The process of reconciling is accomplished by comparing the expenditure report from finance with the CUF accounts that are kept in the program office, and marking or highlighting what CUF account entries also show up on the expenditure report. So just going along and making sure everything lines up. Maybe they're not in the exact order, but making sure that they correspond with each other and that they have the same information for those expenditures on their report as well as your CUF account. And this is to show, this will show when the expenditure was approved, initiated, encumbered at the program level, and when it was paid in full by finance. And maybe not all reports will have all of those details, but that would be helpful. And you can always check with your finance office. If it's not in the report, they should be able to tell you that information if there's any question about it. Go ahead, Jamie, did you have something? Oh, okay, I saw you unmute. I thought maybe you were gonna add something.
Realized my volume was on. Sorry.
No problem. And then I'm on number 2 on the slide. So when the expenditures that were initiated don't show up on the finance expenditure report, then one way of managing that is to keep a separate list or itemization of them as outstanding. And then with your finance department, have a conversation of, these are the things that I noticed aren't showing up on your end, and can we follow up on that? Number 3 is the reconciliation tab on a CUF account. If you do have a tab that talks about reconciliation, that's another way that you can document it and follow up on it. That would have to be something that we get from that class on that sample CUF account. That's not something that I have, but if you take that class, then you'll be able to see that example and have more detail on that. And different tribal finance departments will have different ways that they want you to work a correction with them. For some, it may be just a simple email or phone call. I would recommend in writing it. Maybe they have a form that you fill out and you turn in as a hard copy, and you keep a copy. You know, over the phone, if you do make corrections in that manner, then I would still document it and maybe even follow up with an email so that there's still that written record. Say you call the finance office and say, hey, we see this expenditure that you accidentally have the numbers transposed or put it in the wrong code, and they say, okay, we're going to fix that right now. I would still document it, even though you had that conversation over the phone. Send that follow-up email saying, just to confirm, per our conversation today, this is what it was. This is what we're asking for it to be changed to as of today. You know, that way you have that to fall back on, because just like any other program, maybe in finance, they're working on something else and it could be forgotten, or maybe that person ends up leaving that position and you think everything has been updated and corrected, and then you don't realize till much, much later that it didn't happen, or you can't figure out why your numbers are off many, many months down the road. And it's because maybe that didn't happen on their end for whatever reason. And you can, if you have it in writing, if you have it on email, then you can go back and say, oh, here's where it is. And we can remedy it after the fact if it didn't happen at that time like it was expected to. And if necessary, a budget modification may have to take place. And, you know, for different reasons, maybe what was planned to be spent wasn't. Maybe there were events that took place where say a training or an outreach project wasn't able to be attended. Maybe there's been a lot of staff turnover, so you have a lot of funds in your personnel and fringe lines that you didn't anticipate. Maybe there was a travel and hiring freeze that lasted several months, and so you have more money in those areas than you thought. Maybe you can move those to another line and get those spent, and you would have to work with the project officer to do a budget modification. Those are just a few examples. There are a lot of different reasons why you might do a budget modification, and it's best to work with the project officer as soon as you think that might be necessary. So one, you could get it done properly, the right way to where they're going to accept it, but also sometimes it takes a while for them to review it and get it back to you. But thirdly, so that it allows you to have that time to get those dollars spent down. If you're changing the way they're going to be spent dramatically, you want to make sure you have time to carry that out, what you're requesting to do with those dollars instead. And so if you wait too long and then the project officer takes a long time to get back with you, it may have been a good plan to spend those dollars, but then you wouldn't have time to spend those dollars down. So as soon as a director knows that there might need to be a budget modification, then it would be best to get with their project officer as soon as they could. And Lee put in the comment, what are the recommendations to the AVERS director to track non-federal annual expenditures and report if required? That's a good question. Let me make sure to ponder that. So if I'm understanding you correctly, Lee, are you saying the match, if they received a cash match as the non-federal funds, you're asking how to track those? Is that what you're saying?
Yes.
Okay. So my understanding, and different people do it differently, but from what I understand, some will incorporate some of that into the other lines. Say they'll put some of it, just as an example, into consumer services, or maybe into their travel line to go out into the communities. They might distribute it. And then some have it be their own line, just that cash match. And then they say what they're going to do with that cash match. So depending on how they put that in their budget, it might vary how they track it. As I think the main thing is making sure that they have it documented that they received those dollars, and then that they spent them according to how they put them in their budget, how they said they're going to use those non-federal match dollars. I don't know if there are a lot of programs that do receive the cash match, any of their match being cash portion. But I think it varies how people do that. Jana has her hand up. Hey, Jana, I didn't even know you joined.
Hey, sorry, I was trying to get in earlier, but I'm having technical difficulties. So I wouldn't merge the monies ever. I would always keep them separate as good fiscal management, because on our final report, it asks the difference. What are your federal monies and what are your non-federal monies? So I would never combine them. I mean, it asks what your in-kind match is, and that would be considered your in-kind match. And I would always run a separate, like Rachel's been talking about, a cup account with the in-kind money with it versus our federal money. When you start combining them, it gets confusing and it gets things can get misunderstood really quickly. And so I would hate to give I don't want to say it's misinformation if that's how your accounting office wants it done, but to run those monies together would be very difficult at the end when you're trying to report and do it in a good way. I would always run two separate budgets for that money. And also your third group of money potentially is in kind of match money as well. And you need to be documenting it. I have a file in my drawer where I keep all my in-kind match and all my documentation for my in-kind match. Because that's an auditable thing, and auditors want to see that you have tracked your rent, how you're getting your rental space information, if you're using salaries, that you have an idea of how many hours and that you're tracking the salary. So making sure that you're keeping a file in your drawer of all that documentation, since auditors will want to see that also.
Thank you. Very good points. And that's an example that we didn't talk about as part of our in-kind or match was somebody's time. I don't know if anybody on here has anybody that is being counted. They're basically donating their time. The program's not being charged as part of their, for instance, indirect costs. Excuse me, that whether it be a higher up director or somebody who's doing some oversight for the program, whether it be somebody that you have as an evaluator and they are donating their time. We talked about maybe space and meeting rooms and such that are donated or as part of the match, but we didn't talk really about anybody's time being part of the match or in kind. So I'm glad you mentioned that, Jana. We're trying to think of some examples earlier.
Oh, yeah. And the other thing that Bobby just put into so when we wrote the grant, we're a consortium tribe. So the tribe that took over the management of the grant set an indirect cost rate at 20%. And so the tribe's indirect cost rate is higher than that. So each year I have to go to RSA and say, okay, the tribe set the indirect cost rate for the program or the indirect rate for the program at 20%, but the tribes is currently, let's say, at 35%. So we get to use that difference as indirect or in-kind match from the tribe. And so, but each year we have to negotiate that with RSA and we have to get approval from them. And it is a process, but that's 15% that would go unused as in-kind. And then the tribe should get, but because if I don't do that every year, the tribe doesn't get that. I think it's a gift the tribe gives to all the tribes that participated in the grant from doing that 20% or indirect, sorry. But I definitely would negotiate that if you're paying a lower indirect than what the tribe is paying for. Even if one year it was a couple percent, and even a couple $1,000 is helpful in helping your match for the year.
Thank you.
Jenna, this is Lee.
Hey, Lee.
When you have a TVR program that's set up as a consortia, do you ever request from those other tribes to donate or provide some kind of contribution as part of the non-federal requirement? I recall working with one of the California tribes, and the tribal president had ordered the TVR director to go after those tribes that were part of the consortia and determine how they can contribute to the indirect budget.
Yeah, we again, when we wrote the grant, that was written into all the resolutions of the tribes that were participating. So they each participate in their own percentage rate of the overall indirect or in-kind match amount. So each year, like we use office space, and we're talking about, we have a admin assistant at each of those offices that helps set up our staff, the schedule, take phone calls for us, and collect hand out brochures or that sort of thing. So they're working on our behalf. So we use a percentage of their salary. We use the telephone and internet connection that we would have to pay for, but we don't because the tribe puts in and pays for that. So we have 5 offices out in the communities that the tribes pay for and that they have to provide to us while the grant is out there. And then their tribal chairman signs off on an in-kind match form for us each year, and we submit that as their in-kind match.
All right, thank you.
So we have a lot to cover and we only have about 25 minutes left. And so I'm going to ask everyone if you'll hold your comments and questions to the end so that Rachel can, get through some of these important talking points. And then if we need to, we'll also hold a talking circle next week to just kind of follow up on where we are with some of these questions and maybe even get an email chat going so that we can answer some of these questions. But I did want to, let's go ahead and try to move the webinar along. And thanks to you guys for all of your contribution and comments.
Sorry, I think I was muted too when I said thanks for your comments. So next is, oops, lost our screen. Give us just a moment. I might be able to pull mine up.
I'm not sure if you can hear me, Rachel.
Yes, I can.
Okay, we just had a blip in electricity, so I think that's why everything kind of went blank, but I'm gonna stop sharing and reshare just in case I lost that screen. Sorry about that.
Okay, no problem. I'm
There.
looking. Did it come back? Okay, I was gonna pull mine up in case that was gonna be a longer time for you, but I see it now. Alrighty. So bye Otter, thanks for joining. Some budgetary considerations, strategic planning, and that involves reviewing your expenditures and projecting the next year's program costs while staying within your budget. When reviewing the upcoming year's budget, it's useful to examine the current year's expenditures to decide whether costs will be similar in the next year or how they may increase or decrease. So some of the things to consider is what you put in your grant proposal. Are you going to be increasing the number of individuals that you serve? Did you say you're going to increase the number of individuals that you're going to close successfully in an employment outcome? And as such, you're probably going to spend more money. So you would plan, in your maybe outreach line, if you have travel that you do to attend events in the community, you might increase the consumer services line. There are a number of things. If you put that in a certain year in your grant that you're going to expand your number of staff members, you would want to increase the amount in your personnel and fringe lines. So making sure that you're staying on track with the current year, but also planning ahead is important. And then excessive balances, that's something that RSA keeps an eye on. They pay attention throughout the year. And again, this comes into play with how often your tribe does the drawdowns. In your CUF account, you may have that you're right on track, but then if RSA doesn't see those drawdowns happening, then it may look to them as if you have an excessive balance. But you may actually have an excessive balance because, like we talked about before, there might be some extenuating circumstances where you weren't spending as much as you thought you would for different reasons. So RSA keeps an eye on that. What they're able to see has been spent, what's been reconciled on the G5 system through the finance department. And the definition of what's an excessive or large available balance is if by the end of the second quarter of the grant year, which is March 31st, if 100% of the year's grant funding is unspent, or if at the end of the third quarter of the grant year, which is June 30th, if 70% of the year's grant funding is unspent, that's what constitutes what they consider an excessive balance. So they look at what is available for all the grantees that they can see on the G5 system. And then that report is reviewed by the project officer for each grant. The report's updated every month until all non-competing continuations are awarded. So if programs are having excessive balances, it may be that the following year, this is one example of how that might be addressed, that the award would be reduced by the amount that would be considered the amount they can't reasonably spend in that current year. so that next year it may be reduced. So they start off without a big amount of carryover. And then that does allow them to, go ahead. Did somebody have a comment? Oh, I think somebody might need to mute, perhaps. So then that would allow them to know what's available for an upcoming competition for the other programs. If by chance that they're going to reduce the funds for some programs based on them having an excessive balance, then they would be able to use those funds to be available for the next grant cycle for competing programs. So when a grantee is identified as having a large available balance, it doesn't always mean that there's a problem or a failure on the part of the grantee. There are a lot of different reasons why somebody might have an excessive balance. Some grantees use their own tribal dollars to operate and then reimburse themselves from the G5 system when they do a drawdown for VR, or there might be other grants within the tribe that they do the same thing with. And then other grantees draw funds from the GI accounts just on a certain schedule, and it may not keep up with all of those expenditures. It may be just periodically, such as monthly, quarterly, depending on how the tribe has their system set up. And if there's an excessive balance issue that requires resolution, the project officer will work with that grantee and document in the grant file how the excessive or large balance issues affected them and how they will be resolved. Let's see, Jamie put in the chat, we have a lot to still cover. Oh, sorry, she already said that verbally. Okay. Internal controls. So internal controls can help improve accountability, help the program achieve performance and budget targets, help to improve reliability of financial reporting, improve compliance, and prevent loss of public trust. Go ahead, Jamie. So next, we're going to go over the cost principles as it relates to the financial management. And federal regulations establish guidelines or cost principles for determining costs applicable to awards. So one of those is reasonable. Is a cost reasonable? And you might have heard this many times: reasonable, allocable, and allowable. So we're going to go over reasonable first. And a cost is reasonable if, in its nature and amount, it doesn't exceed that which would be incurred by a prudent person under the circumstances prevailing at the time the decision was made to incur the cost. And that's in 200.404. And to determine if an expenditure is reasonable, you can ask yourself the following questions. Is the cost recognized as necessary and ordinary for the performance of the grant? Have the individuals incurring this cost acted with due prudence, such as discretion and good sense in the circumstances? And were the actions that were taken in respect to incurring the cost consistent with established policies and practices applicable to the grant? So what might be reasonable for one TVR program may not necessarily always be reasonable for another TVR program. And what might be reasonable for a TVR program might not be reasonable for, say, a child care program or a social services program. So it's important to think about what is the situation at that time for that particular program. There are costs that aren't reasonable in maybe California that are reasonable in Alaska. So we can't just across the board say this particular cost is not reasonable, because it may be in some parts of the country or under certain circumstances and not in other parts of the country. So go ahead to the next slide, please, Jamie.
Yes, I appreciate you saying that too, Rachel, because a lot of times the details, the circumstances will change what the meaning of reasonable, allocable, or applicable costs are. And just like you said, in one circumstance in one tribal VR area may be completely different in another. And so we get a lot of questions about that. You know, is this an allowable cost? Well, it depends. You know, the answer to that may be much different if you share the details with me and we talk about it more. So thanks for bringing that point out.
Definitely. Okay, so next will be allocable. And allocable is treated consistently with other costs incurred for the same purpose in like circumstances and benefits the award. A cost is allocable to a particular award if the goods or services involved can be directly assigned to the award based on the benefit provided. To determine if an expenditure is allocable, ask yourself the following questions. So these slides right here, to me, are handy to just have on hand and be able to just tick off those questions. You know, ask these and see if that will help you to make that decision reasonably. Is it incurred solely to advance the work under the award? Does it benefit the award and other activities? And can it be distributed to all benefited activities using reasonable methods? Does the basis for allocating the cost represent a reasonable estimation of the direct benefit provided to the award objectives? And if a cost is to be allocated to more than one award, how is the cost allocated? So what comes to mind for this is sometimes over the years, we've heard that TVRs were charged for certain things. Maybe their finance department, whether made a mistake or had a misunderstanding of what can be charged to the program, and a dollar amount was reduced in their account that had nothing to do with carrying out TVR services. It might have been a tribal activity or event, or somebody that went on training from a totally different department and it got charged to TVR. Again, it might have been by mistake. So this is where you take those consolidations with your finance department. You're looking over those expenditures and you say, wait, I don't know why this person's travel was paid under our department. And allocable is what you can point to in saying, you know, this is not an allocable expense. That cannot be charged to our program because that has nothing to do with advancing or carrying out our duties and helping the program in any way. It's completely unrelated. Therefore, it's not an allocable expense to our program. Go ahead, Jamie. And then allowable, a cost within award limitations that are consistent, documented, reasonable, and allocable. And that's in section 200.403. Sponsoring agencies use the term allowable to mean permitted as a cost within general federal regulations, the terms of a specific award, and or the institution's indirect cost rate. Costs expressively unallowable are mutually agreed to be unallowable should be identified and excluded from any billing, claim, application, or proposal related to a sponsored award. So there are a number of things that are not allowable. If it's not meeting certain criteria, it's unallowable for our programs to purchase food. There are some situations where it is allowable, but it's not across the board. Like, well, we purchased food that one time, so we could just purchase food to have for everybody in the office. That's not an allowable expense. There are other things that are not allowable. I would say, like, for instance, during travel and training, there are certain travel and training expenses that are allowable. Entertainment while on travel and training is not one of them. I'm trying to think of other specific examples. And anybody is free to throw out unallowable costs.
I was just thinking to myself, Rachel, that a lot of times when we get a question about, you know, can I spend money on this? Is this allowable? The first thing that I think of is, well, explain to me, how does that support the employment goal?
Mm-hmm.
And a lot of times when you really break it down to that point and you say, okay, well, give me the details on exactly how that is supporting that employment goal and how it affects the outcome of the employment.
Very good idea.
You can really decide right then, you know, is this an allowable cost or is it not? So that's just one thing that I think of when we talk about allowable costs and can we spend money on this or that or the other? And I just want to welcome and acknowledge that we do have a program or project officer here with us today. Adrian Rodriguez has joined us. And Adrian, I know you're so busy, but I do want to thank you for taking the time to join us.
Hi, Adrian. Thank you for being here.
you. Thank you. I'm sorry I can't really like be on camera or anything. Actually it's kind of embarrassing. My headphones aren't working.
Oh,
So
no.
and I'm in an open space, but I am listening and excited to hear you all deep dive into all the principles. So thank you.
Thank you. All right, next we'll talk about some payment for services. So written policies to govern the rates of payment for all purchases, purchased VR services. So it's advisable to establish a fee schedule designed to ensure the TVR pays a reasonable cost for each service, as long as the fee schedule is not so low as to effectively deny an individual a necessary service. It permits exemptions so that individual needs can be addressed. And it's important, very important to know that the TVR program cannot place absolute dollar amounts or limits on the amount it will pay for specific service categories or on the total services provided to that individual. And that is important for so many reasons, but including that we don't know what that person's needs are going to be related to their disability. You know, different barriers can be presented for different individuals, even if they have the same disability. But we serve people with such a wide range of disabilities, and some do require more assistance to overcome those barriers. Some have more barriers than others. And so for us to cap and say, oh, we'll only spend, $5,000 per year per consumer, there might be different guidelines that our program establishes, but we cannot cap that absolutely and say we will not go above X number of dollars per person or per year. Thank you. And there's a comment in the chat box. I appreciate this because of course I'm new and need the deep dive, but I also would love the PowerPoint to reference as well. Was why I asked that. So thank you. You're welcome. We're glad you're here. And we welcome everybody who's new to learn all we can. There's so much information to learn. So thank you for being here. So the duration of services, establish reasonable time periods for the provision of services, provided that the time periods are not so short as to effectively deny an individual a necessary service, and permit exceptions so that the individual needs can be addressed. Similar to the dollar amount we just talked about, TVR may not place time limits on the provision of specific services or on the provision of services to an individual. We can't say you can only be in our program for 1 year. You can only be in our program for 2 years, or we will help you with training, but only if you can complete that program in 1 year. The duration of each service needed by an individual must be determined on the basis of that individual's needs and be reflected in their IPE. So we do set forth a window of time in the IPE for services to be provided, and it should not be, if they're getting 10 services, not all 10 services should have the same timeline of from when the IPE starts all the way to when the IPE ends. Things like counseling and guidance will be that whole time. Maybe we think that they're going to be successfully employed and have their employment established and they've been there for at least 90 days. And we think that whole process from the beginning of the IPE to the end will take 16 months. So the counseling and guidance would likely be that whole time, but we wouldn't put maybe their training or when we provide mock interviews or job placement services, and when we provide maybe disability management and other things, we wouldn't put all of them to be that whole time because that wouldn't be individualized. However, we want those timelines for those individual services to be reasonable and be able to have those carried out in that time. Sometimes those things might get delayed for some reason or another, and then the IPE might be able to be amended if needed, but those time periods need to be reasonable for that individual's needs. And they do need to be long enough to be carried out. We can't say that they have, again, using training as an example, we can't say that they have to complete it in 6 months when it might not be reasonable in their circumstances to do so, for whether it be their disability needs, whether it be that training program that's available only certain times of the year, or those kinds of things. Those all need to be taken into consideration. Go ahead, next slide, Jamie.
Sure.
Okay.
I just wanted to add, Rachel, also staggering those services or the start and end times of those services a lot of times also allows you to measure progress with the case or with the IPE. So once you've accomplished one particular service, then a service after that may start, and then you are showing growth or movement in the particular case itself.
Very true. And Jamie, can I ask how many slides we have left? I know we're getting right about to the end of our time. I want to make sure that we get through all the slides.
We have 2 slides left, and then
Okay.
we have a minute or two for questions and answers at the end.
And I'm free to stay on a little later since we didn't, we're not leaving too much time for questions, but I can stay on a little longer too for those. But sounds like we're almost there. Okay, so authorization of services. A TVR unit must establish policies related to the timely authorization of services. Were there more bullets on that slide? Excuse me. Oh, well, go ahead and go back for just a moment, please. So, no, I'm sorry, on that next one right there. Thank you. I don't know if there's a delay on my end, right there on number 3. There might be a delay on when I see it change. I'm sorry. So you want to make sure that you have a system in place where those services can be authorized quickly, so that you're not delaying those services being provided and different approvals and such. So depending on how you have your program set up and who has to sign off on what, you want to make sure that those are happening in an expeditious manner, so that those aren't delayed for those consumers and the application process as well. Okay, go ahead, Jamie. So just to recap, establishing initial program budget from grant documents. So we talked about reviewing the grant budget, match, indirect costs, fund accounting, budget modifications and revisions, setting up financial tracking, reports from the accounting department, utilizing CUF accounts, creating a system to confidentially code participant names, inventory management, and then budgetary considerations, reconciling financial reports with the CUF account, budget modifications, strategic planning, excessive balances. And again, this is all just such an outline. There's a lot more information in the toolkit and in the class, the TVR S311 class. And you don't have to be a director to take that class, but that's kind of how it's geared toward, last I knew. It's been quite some time since I taught that class, but last I knew it was geared toward directors, but it's really got a lot of good information too. Also, if you're not a director, to better understand some of the decisions that your director makes and why they might make those decisions. I think that could be useful for non-directors in that manner to take that class as well. We will take any questions or comments, and thank you all for hanging out this long with us. I'm gonna scroll and see if we missed any in the chat box too in the meantime.
Yeah, thanks so much, Rachel. That was a great, I mean, an hour and a half really isn't enough time to really discuss in depth every single part of that. But we did want to do just an overview of some of the highlights from the TVR Institute's Financial Management Toolkit, and then encourage you as you learn more, especially for new directors here today, or even directors that are wanting to brush up, you know, on their grant management or financial management skills. Please do register for the course at Northwest Indian College at the TVR Institute. Yes, the recording, Irma, will be on our website at avertac.org under the webinar section. So just be sure to go there for that. And again, Rachel, thank you for all of your time. I'm willing to stay on too, if anyone wants to stay on with additional questions, and can't thank you all enough for your contributions to today's webinar.